When not to start a bank. Okay.
So yeah, I mean, now isn't necessarily a great time to be starting a regular bank, but if it's app only, then there's obviously they compare quite well. App only accounts and banks are doing really well right now because people have got more time and they're playing more at home because like they're on the sofa thinking of something to do and thinking, hang on, I've downloaded this but not actually used it. What's it like? And signing up and stuff. So I know there's lots of accounts and app only things that people are doing more than they used to. And they can't go into their own banks, of course. And they're thinking, well, okay, so what do the app ones look like? And how do they compare? And obviously they compare quite well, quite favourably to the HSBCs and Barclays of the world. So,
is that just because they're cheaper to run and less people want to actually go into physical banks?
Well, no. So clearly they're cheaper to run because most of the challenger banks are on the cloud, and all the incumbents have got their own data centres. And that was one of the big things that we really wanted to try to do when we did Starling, was to try to make sure that we were the first bank to launch in the cloud, because that allowed us to significantly reduce our run costs. It was really so much cheaper to run in the cloud. Now, at the time, this would have been November 2015, the FCA hadn't given you authorization to do that. They said, we're not allowing anyone to launch in the cloud. We don't consider it safe. But obviously, we know now that it's far more secure in many ways to launch in the cloud and run cloud-based banking than data center owned banks. So, but that was a big deal for us because it significantly enabled us to scale up from half a dozen customers to over 1 million customers just in the cloud. But that's a significant part of it. But the key part of it is the features and functions of the challenger brands are so much better than the incumbents. They the notifications, the helpful tips and hints, those things people have found to be really useful and really engaging. And actually, the strange thing is, in the normal course of one's day, like back in January, when you could actually move around and stuff, after social media, your Monzo, your Starling, your Revolut app was the most engaging app that you had on your phone, because every time you used your card, or every time you made a payment, or every time you received money or sent money, you got notifications through that. And that in level of engagement, you only tend to get through social media, and social media is the only thing on people's iPhones nowadays, or Samsungs and stuff, that enables people to be able to get involved and and have an interaction with their phone. So we're really pleased that the interaction has gone up from you never touch it, you never go into your banking app very often, or maybe once or twice a week, to multiple times a day. And that level of engagement has enabled us to be able to use that engagement to help provide insightful information about you and your spending patterns and stuff, and that's been really useful. So we've only yet started to see the art of the possible in terms of what we're going to be doing in terms of using that data to make your life better. And that's the key thing. That one of the things we wanted to make sure in using people's data is to say that this is your data. The first time we recognise it's your data. I mean, can you imagine 4 or 5 years ago when we first launched? It was before GDPR and before some of the Big Brother stories. People didn't necessarily appreciate that every bit of information that they gave the bank should be theirs, and we take it for granted now. And we have to have specific authorization to share data. But back then, we will allow you to take your money out of our bank subject to certain restrictions and stuff. And we'd like to think that's been turned on its head in the last 5 years.
We've got Mark with us, who was head of tech at Barclays, one of the founders of Starling Bank, and has now left to found a crypto challenger bank called Ziglu. It's now his second fintech. Is that right? Second fintech EMI that you've run?
Third.
I'll leave you to it.
Thank you.
Pleasure.
Now, so this is not the first time I've spoken at one of Erica's events, and they're always great events. It's a little bit different because we're not all in the same room having a curry and having a beer. You might be having a beer, but I'm trying to be good and having water at least until 7 o'clock, which is very unlike me for those on the call. And there's a few on the call I recognise the names of who know me well. So it's not so easy to be funny. And Erica likes me to be funny, and I'm not so good at being funny when it's virtual.
No pressure.
So I will do my best to bring the humorous side of founding a bank, if there is one. So I guess I'm not going to go through anything and try and patronise you about talking about the sorts of things that you should do what you love, and that's like a WeWork expression. And you need to take risks and all the sort of things that you will have heard 100 times from people that claim to have done stuff and claim to be successful. You need to find your own path, and the reason I did banking and moved from Barclays Bank where I started out. And I should perhaps give you a quick history of me, I guess. So after uni, I moved into Barclays Bank, and I finished up the head of technology for the Barclays Group. And then I founded and sold my first technology business in 2003. I ran an IT consultancy and software development business for a few years. And then in 2014, 2015, legislation changed in Europe, as you might be aware. The European Banking Authority empowered the FCA, Financial Conduct Authority over here, to be able to make things easier for fintechs to become banks. Up until that point, there was Metro got a banking license years ago. It would have been around about 2011, 12, something like that. But up until that was the first bank in 100 years or so. It was really difficult, and current account switching, or CAS, wasn't working. So you're not going to cross the road to go from to Lloyds to Barclays, because I'm sorry guys if anyone works at Lloyds or Barclays, they're as bad as each other. And so they wanted to enter more competition into the marketplace, and wanted some more challenge, and wanted some more innovation. And it was really difficult to raise money to found a bank when you didn't know you're going to get a banking license at the end of it. So what this new legislation, this fast pass banking, allowed you to do is to be able to get part of the way through the licensing process and then get some funding for that part. And then you get go further through the process and get more funding. And those sort of step changes, incremental baby steps, meant that you could take funding as you were going along. And that was a godsend to a few companies. That enabled you to be able to do it for the first time, really. So a few companies took advantage of that. And just ahead of us, there was Tandem, and there was Atom, and there was Open North, and one or two others as well. And Starling Bank, which I founded along with the founding team back in 2015, was the first, I think, proper true current account bank that launched. And just behind us was Mondo, or Monzo as it's called now. And I think both those two banks have been pretty successful in terms of what they've done. But before I go on, it comes back to that sort of first point. You have to have the motivation to want to do it, and it's not a monetary motivation that I did that. I did it because I knew I could do it. But importantly, I did it because I gave a damn about wanting to deliver a better bank than I thought was out there. So I was, despite doing rather well in Barclays in relative terms, when I went into Barclays, it was one of those things that you were respected and almost revered as a bank manager in the old days. And we probably can't even remember that as being something that people respected back in those days. But people did. They respected bank managers, and it was a good, honest profession. And it was important that you felt like you're important. You're doing a great job, and you were doing something that was important. But I was a little bit embarrassed towards the end of my career in Barclays. I felt that all the banks, and most notably Barclays at the time, weren't really putting the customer first. It was about ripping customers off and making money for shareholders. Now, making money for shareholders is an important part of any business, of course, but not at the expense of customers. And I think what I wanted to try to do is, I was slightly embarrassed, as I said, and I wanted to try to fix that. And you couldn't really fix it in the sort of early noughties, and it wasn't until you got to these legislative changes that meant you could do something about it. But it was I remember writing towards my end of my career in Barclays to the Barclays Ideas Committee, and they had this committee which was set up in London, and I was in regional office or maybe branch banking at the time. And I wrote to our head office and said to the Ideas Committee, and said, I've got a great idea for a mortgage whereby an account in effect that allows you to offset any credit balances you've got. You may have some savings against any borrowings or any mortgage you have, and that allows people to be able to borrow less, and we charge them less. And there's quite a few customers at our branch. I think I was at Barclays Bank Plain at the time, that this would be good for. And the letter that came back from the Ideas Committee was, we don't see how this is in the interest of Barclays Bank. And so I responded, and said, well, if it's good for customers, it should be good for Barclays as well. And I've got a very curt response, which I've still got upstairs in a drawer somewhere from Barclays, which is basically, that's not what we're going to be doing. And then about 3 or 4 years later, I think it was Virgin that launched the offset mortgage, and things started to change a little bit. But they have let us down, banks, and I wanted to do something that genuinely meant something to me. And when I got an opportunity I grasped it with both hands and wanted to try to make a difference and do something that was better than what was out there. To my original point, I think you need to have that drive and determination. You need to have a love of what you're doing. You need to give a damn and care about what you're doing. And you need to be good at it and know you're not like, there's no point doing something that you're not passionate about and you don't think you can do well. So having that passion, that desire, that focus is almost like the Maslow's hierarchy of needs is the bottom of that for me. Without that, you can't do anything. So when I got the opportunity, I did it, and that to do it is not as tough as you necessarily might think. So there's quite a few changes because of the fact that 2007, 2008 we had all the problems in banking. Regulators wanted to fix that. They wanted fintechs to compete, and interestingly, quite a few of the fintechs didn't know a huge amount about banking. I've been in meetings with some of the CEOs and CTOs of some of the fintechs I've mentioned so far, and they don't know much about banking, or didn't know much about banking when they were founding them. They clearly do now. But at the time, it was quite interesting to see the fintech entrepreneurs coming into the marketplace, learn a bit about banking. But that's quite good in some ways, because they haven't got the hang-ups, they haven't got the problems that many of the more traditional bankers had. So it was a good thing. You see the success of what they've done and how that enabled you to be able to get this license quicker. So let me just talk you through the process, because it's quite important and I'll contrast it to an e-money license in a moment. So a full banking license comes in stages, and there's the first part where you're effectively putting all your documentation together, and that there's a big license application process that it's just all downloadable off the FCA website. But you need good people in all those areas to be able to answer the questions and do the documents. It's actually quite a lot of paperwork. There's probably months worth, in our case 6 to 9 months worth of paperwork, and it's important because it helps you think about what type of bank am I going to run, what's important to me, how many customers am I going to have, how am I going to make money, what's my way of making money, and you need a range of different people around the table to help you do that. And we had some fantastic people in Starling in the early days that put this documentation together, that did all the thinking about the business plan, did all the documentation that was required for the licensing process, and brilliant people that worked really hard with no pay for month after month after month. And then when we got to a point, and what you do, or what one does, is because the PRA, the Prudential Regulatory Authority, which is part of the Bank of England, and the FCA effectively come together to provide you with that license, and you need to make them aware that you're applying and meet them if you can. And you don't apply without being asked to apply. And when you apply, or when you're asked to apply, you put all your paperwork in, and we took our first investment at that point in time, which was a big step. So if you're asked to apply for a banking license, the regulators think that you've got a fair chance of going through the process. Therefore, you can take some investment in, because your investors think that therefore you're on the way to progressing. And it's very important that when you're talking to both your investors and to regulators, that you're keeping them both abreast of what the situation is, because you need them both in order to move through the steps of the licensing process. And in order to convince investors and also that that you can do what you say you're going to do, you need to provide some evidence and progress of not only your documentation, but I was the CTO of Starling. Therefore, we put together not only the paperwork for the technology and everything that goes with it, but we also did some demos of what the infrastructure would be, what the app would look like, how it would work. And that was important to convince investors and people that, you know, we could build and it would be different and it would be compelling. But it's a strange thing when you sit down, as we did repeatedly with many potential investors back in 2015, trying to convince investors that you had a proposition that could compete with a Barclays or a Lloyds or an RBS when they're worth billions of pounds, their pockets are really deep, and you're going to have no branches. And remember, this was in 2015 when every bank had branches. So you're going to have no branches. You're not going to deal with cash. You're not going to deal with checks. You're not even going to have a website that enables you to be able to do any account servicing. It's like, I've lost my card, I've lost my phone, and what do I do about that? So you don't do servicing. So it was quite an unusual concept at the time, just saying that, yeah, we are going to launch in that a bank, an app-only bank, and we are going to compete with those guys, and we're going to win customers from them. And we were pushed back once or twice to say, you're not going to get that many customers, and we had to tone down significantly the number of customers that we said we would get, because regulators thought there's no way you'll get that many customers, because we've got you coming to us with saying you're going to get 1.5 million customers. We've got Monzo, we've got Tandem, we've got Atom, we've got Open North. There's a whole raft of banks behind you that think they're going to get customers as well. There's no way that you're going to do that. So we had to reduce our customers and adjust our business case accordingly to say, look, we still think it's a viable proposition with half as many customers, for example. And that was tough on our business case. But once we were able to convince ourselves that we could do it on those customers, and we were able to convince investors and regulators, then we went through that process of what's called mobilization. So you put your application in and you're mobilizing. And what that effectively means is you're starting the process of using that first bit of money to build a bank in effect, and mobilize a team and get to a point where in the process of the regulators reviewing our application, you can go backwards and forwards and they'll ask you questions about your IT, about your compliance, about your capital adequacy, about your liquidity adequacy, about everything to do with how you're going to run that bank. And you need to have the right people available to answer those questions, and they need to be good. So surround yourself by people better than you or good is really important. And the team we had at Starling was first class and got us through that process. We put our application in 21st of December 2015 and got our license in June 2016. And that was a license that was called authorization with restrictions. So it allows you to be able to start the process of, you know, the doors are open, but they're not fully open yet. You still need to be able to convince them that everything that you said you would do, you will do. And then you get what's called full lifting restrictions when you're open for business properly. But in that whole process, there's lots of decisions to make depending on what you consider yourself to be and what you consider your strengths to be. So the banks in front of us were Tandem and Atom and Open North, which they're all banks, but they do things slightly differently. So they use FIS, Fiserv, and Mambu as banking platforms, and we were the first bank to say we're going to build our own platform. We're not going to buy one of those products or a MySys or a Temenos or any of those. We're going to build our own. Now, that was quite a big decision because we took the risk that the regulators would say, hang on, you're not only launching a bank, you think, but you're also going to be building your own banking platform. That means calculating all the ledger movements, all the transactions, end-of-day balances, reporting, and transaction monitoring, everything that you need to do, interest calculations, both tiered interest rates up and tiered interest rates down. You know, that, improving all that and building all that from scratch had never been done before. So it was quite a big decision to do that, and quite a bold decision to do that, but we did. And when we launched, we were the first current account bank to launch in the cloud, build our own bank and launch in the cloud. Subsequently, Monzo did it, and then Revolut did it, and my current bank, Ziglu, or current EMI company, Ziglu, has built a banking platform from scratch as well. I'll talk about that in a moment. But it's a big decision to do that. And if if you're confident in your tech, in your people, in your technology, and you know that's at the heart of what you stand for as a company, then I believe it's the right thing to do. You've got to believe that you can do it though. It's not the easiest thing in the world to be able to build a banking ledger and ensure you've got transactional integrity about everything that you do, and integrate it to multiple different third parties to be able to do cards and processing and KYC and AML, and in the case of banking, you know, these links to Gabriel, which is Bank of England systems, and everything that you need to integrate to provide best of breed providers needs API interfaces, and it comes into this core banking ledger. It's actually, you know, pretty hard to do it. There's only four companies in the world that have achieved that so far. So that is a big decision, but again, given I guess our belief in ourselves and the fact that technology is really important to us, and also going forward, I sort of touched on this before we sort of started. Launching in the cloud was really important to us as well, because we, as I said, we were the first current account bank to launch in the cloud, and that was important. The regulators didn't allow it initially. It wasn't until a paper came out in November 2015 that supported the principle of doing it that we were able. And I think there was a few of the challenges at the time said, look, we want to be able to do this. And I think the Monzo guys said that, and the Oak North guys said, look, we want to launch on the cloud. We don't want to be launching in a data center. So we sort of took it to the regulators and said, look, it's you know, it's a bit of a no-brainer, but it's the right thing to do. But there was still back then the whole concern about security of cloud-based systems and all that sort of rubbish. That obviously that battle's been won a few years ago now, but back then there was a genuine concern it wasn't secure. So we had to go through and win that battle and win those challenges with regulators. Not only that we wanted to launch in the cloud, but our core banking platform would work. It would be performant. It would be resilient. It wouldn't fall over. And I think I'm correct in saying Starling Bank hasn't fallen over in 5 years. So I'm proud of that, and I'm proud of the fact that it's probably fallen over less than Barclays or RBS certainly. So you can build reliable cloud-based banking platforms, but there are options out there as well. If you wanted to be able to buy rather than build. Interestingly, we did actually look at Mambu. We actually bought Mambu as an insurance policy if we couldn't do it ourselves, which is a core banking platform. And it's pretty good. And I know a few banks out there that use it, of course. N26 runs off Mambu, as does Oak North. But there's other older providers out there, FIS and Fiserv as well, that support 1 or 2 banks. But it's a big decision to make to be able to do that. But then you're live and you've got a bank, and you forecasted that in your business plan with regulators and investors that people would switch across to you quickly. But what we found was people weren't switching, current account switching cash. They weren't cashing across in the numbers that we thought. So that has a direct effect on the bank's income, because if people aren't switching across, that means that the salary isn't going in, and therefore as a bank you can't see the money coming in, and direct debit standing orders going out. You can't understand the ability to repay. Therefore, whilst you may have a credit score as part of the onboarding process or subsequently, you still don't really know whether you can lend that person £100 or £1,000 or £10,000, because you don't know the true financial position. So you can only do that if people cash, and very few people were cashing because perhaps they were a little bit worried about the banks to start with. But even now, and this data is a little bit out of date because I haven't validated it in the last 8 to 12 weeks or so. But Monzo cash rates were only 30%, and Starling cash rates were 60%. And I think they will have moved up since the last data. But that's really quite important, because it means, and as you can see in terms of average balances, around about £1,200 per customer at Starling, around about £120 per customer at Monzo, believe it or not. If you've not got the money in there and you're not seeing the movement of money, you can't give somebody that overdraft. Therefore, you can't lend them. Therefore, you can't charge them interest. Therefore, your revenue goes down. And all the banks have suffered from that. People aren't switching across in the numbers they thought. They're keeping their primary Barclays, Lloyds, old Incumbent bank just for security more than anything. And therefore, that income hasn't been coming through. But on the plus side, we see, as I'm sure everyone's aware, and even now, I guess I'm quite surprised, but pleasantly surprised at the valuations that we're seeing from challenges. Typically the valuations are around about £1,000 per customer. So if you've got, Starling Bank as an example, you've got just over 1 million customers, you've added just over £1 billion, and they're all the same all the way up. Whether it's the 4 million customers that Monzo have got and their valuation, right up to the 6 billion valuation of Revolut and their customers, which I think are around about 10 million. So that ratio doesn't quite work with those guys. But they've got a slightly different business model, of course. They're an e-money company that does, FX and a bit of crypto rather than perhaps a traditional bank. But those problems in casting, those problems in lending are challenges that the new banks have got. But the valuations have been great, and those valuations have meant that you can raise money relatively cheaply because the valuations are so high. When you're moving up to the level of £1 billion plus and you're raising 100, 200 million, or you're getting 100 million from the UK taxpayer under the RBS fund, of course, then that's cheap money. And we've seen the use of that money in some cases, but it supported the perhaps not quite as profitable businesses as we thought. But they're all ostensibly profitable now. I mean, we see the headlines maybe that they're not profitable, but they are. But all of the banks are pushing for expansion massively. So if you look at the more expansive of the challenges, the N26s, the Revoluts and the Monzos, they're pushing out in the States and pushing hard to try to get customer numbers, and they are getting customer numbers. They're licensing the States, they're across Europe, and they're using shareholder money and profit to be able to drive that expansion. That's in both marketing terms, but also setting up offices, setting up call centers, etc. in America. Now, interestingly, I mentioned N26 in that, and N26 are obviously Berlin-based banking platform, sits on Mambu. Interestingly, retrenched in the last 3 months from the UK, citing Brexit, which is rubbish, of course. I think they just face too much competition from Monzo and Starling and the challenges over here, and thought they'd have a better chance in America until they realised that Monzo and Revolut are going over there. So good luck over there. But I was in San Francisco in October last year. I was having a burger just off Main Square, Union Square there, and there a bus drove past with N26 on the side of it, and then a minute later another one, a minute later another one. So they're spending loads of money on their expansion in America, and certainly in California. And I think that's where their focus was and is. It's not about Brexit, I don't think. But I think it's fair to say that if you look back and on 5 years of what's gone on, there's hell of a lot of change that's gone on, and I'm quite proud of my small part in that. And I'm certainly proud of the fact that the challenger banks have made a difference to the way that we all go about, banking and go about our day-to-day lives. I would imagine, I can't really do a show of hands like I could in a curry plate in a lunch with.
We can do a show of hands here. All attendees can raise a blue.
I didn't know that.
Blue hand.
I could have used that to start. Right. Let's do that then. So how many of the people here on this call have not got an account with a challenger bank? Can I ask that question? So there's 56 people on the call. How many haven't got an account with a challenger?
About 10%, 5.
Yeah. Okay. Well, well, good. I mean, so that sort of supports what I'm saying, and that I'm pleased with. It's. I mean, we are the demographic, of course, that is into this sort of 25 to 45 in the city type of into tech and finance. You'd expect a high percentage, of course, but it's a pretty high percentage, and more than the regulators, and arguably more than us, but certainly more than the incumbent banks thought we would achieve. So between the main 4 banks, challengers that is, there's over 21 million personal customers been taken from the incumbent banks over the last 3 years or so. That's a big number. And the incumbents started off being a little bit arrogant. It won't succeed. Then they were arrogant in terms of the fact that even if it does succeed, you're only taking personal customers anyway, and they cost us money, which isn't true. And now I think for the first time, as some of those banks are starting to take away SME customers, they realise it's the thin end of the wedge. They realise that it will move up into the corporate market, the SME market, the corporate market makes money, and there's several 100,000 customers being taken in that marketplace. And it wouldn't surprise me at all if in 5 years' time the incumbents were left to deal with the investment banking market and maybe large corporates and effectively gave up on the personal side of the marketplace. The horrible thing about what we're all going through right now in terms of Corona and COVID-19 is that it's hastening and pushing us all to do stuff more online. Even sort of the generation that didn't really want to, sort of 50, 55, 60 plus generation that like branch banking and like the relationship type of approach, realizing that, okay, well, I've got to do something different now, and it's accelerating online transactions, whether it's banking or it's commerce. Now, for me, that's a good thing, but obviously in horrible circumstances. But it was inevitable that we got there in a period of time. And I think, we'll come out of this dreadful crisis, paying for it for a while, I'm sure, but ultimately stronger and ultimately embracing technology more. And I think, if it hastens a focus on the incumbent banks doing what they can do and doing it well, and allows the challenges to pick up the customers and start making money from those customers because of open banking and because of the things that we do intend to do going forward in terms of the elements of with a vast number of customers, you can use that customer database, those customers, to be able to sell them other products and services. Now it was never part of Starling Bank's or any other necessarily of the initial challenges plans to oversell the way that the incumbents have done. It was just to provide a simple current account and do it really well and build a positive relationship with customers so that they just had something that they didn't have before, a positive relationship with their bank. And I've used this story before, and I perhaps shouldn't be the original founder of Starling, but I was in one or two people on the call have heard this, so I'm sorry if you've heard it before, but it's an interesting story, and it shows a different perception that people have about the modern challenger banks to their old banks. But I was in Pret. I go into Pret every morning. I go off at Cannon Street Station, go to Pret, and I go to my wee work at One Poultry. And there was a couple of girls in front of me at the tills in the two respective rows who were paying for their coffees, and they both at the same time put down the Hot Coral Monzo card to pay for their coffees at the same time, and sort of noticed out the corner of each other's eye they were doing this, and sort of without any provocation at all, they sort of looked at each other and just high-fived each other in Pret, and then went on their business. Like, you wouldn't get that with two Barclays customers, of course. So they've made a positive difference, and people like the banks, and people like what they stand for. People know they're humans that are running it, and they know they're trying to do the right thing. And I think that's been a really great outcome. It's been a great outcome how many customers have been moved across. It's been a great outcome that people like and respect those banks and know they're trying to do the right thing by them. And I genuinely think that it will carry on going, and the curve of growth will continue for those challenger banks. Now, actually tomorrow we're launching to App Store our new sort of banking current account. So my new company is called Ziglu. It is a full current account in the cloud, so sort code, account number, IBAN, but we also do foreign exchange from currency, interbank rates, allowing you to buy and sell and hold multiple currencies in your account with us. But we're also doing crypto as well. So what we're enabling you to be able to do is also instantly buy crypto at the best price, because we're integrated in multiple different crypto exchanges. So that enables you to be able to say you want some Bitcoin, and we know Bitcoin at the moment is best on Kraken, and it's in euro. We'll sell you sterling, buy euro, sell you euro, buy Bitcoin on Kraken, all sub-second, and give it you immediately so that you can hold it in your account. Or if you want to, you can spend it with a MasterCard debit card, but it gives you instant access to it for the first time. So we're launching that. It's going to App Store tomorrow. It probably take up to a fortnight to hit the streets, so to speak, but we've been working on that for the last 18 months or so. So yeah, full current account with crypto and with foreign exchange. Strange time to be launching. I think we're going to be the first sort of banking. Well, actually, we're an e-money company rather than a banking company. I should just talk about the nuances and the reason why it's an e-money company rather than a banking company in a sec. But yeah, I think we're going to be the first sort of e-money banking proposition launching virtually. So who's our marketing guru in Ziglu is in charge of positioning this for us in the marketplace and how we do that. And good luck. How she's going to do that. I think she's on this call actually. Yeah, so good luck. But it's going to be an interesting proposition how we position this, because we don't, it's in many ways we know it's a good time to be launching because people have got more time, but it's also a shit time to be launching because people's focus is on their loved ones dying and being taken ill and not having jobs and being furloughed. So it's a bad environment broadly, but for fintech it's not, it's reasonably good. So we need to try to position that in a way that's sympathetic and appropriate to this launch. So good luck with that, Nicola. One thing I should just clarify is the difference between an e-money license and a banking license, if you're not aware. So the next level down from a full banking license is an e-money license. That enables you to be able to do most of the things that you can do as a bank. It just means that the money that the fiat currency that you have deposited with you needs to sit with a PRA regulated bank. And there's a number of banks out there that you can put the money with. We're connected to 3 banks, B2B bank providers, and that's where. So if you send us or transfer us money in from your Monzo or Starling or Barclays account, we put that money with our bank provider in a safeguarding account. But you see it in your app, and when you buy cryptocurrency with us, that sits on the different exchanges, but it's available on your app. And so the key difference is our money has to sit with a regulated bank. But to all intents and purposes, we can do everything that a bank can do. We can't lend your money out; it has to sit in a safeguarding account. So we don't take any lending risk on your money because we can't do that. We can't buy government bonds and treasury bonds and things like that because again, it's not our money; it's your money sitting in a safeguarding account. But what it does enable us to be able to do through open banking and through the Second Payment Services Directive, or PSD2 as it's known, that afforded us a whole raft of new open banking changes that enables us to be able to provide API gateways into a range of different third parties. I'm sure you're aware, can enable us and other e-money companies to provide access to your accounts at Barclays or Lloyds or wherever, or Starling for that matter. But also enables us to be able to provide lending through third parties or wealth through third parties or insurance through third parties. So we will be doing that in due course as well. So yeah, a full services financial services company, bringing everything that I guess we've learned from doing a sort of a challenger bank, but bringing it to the sort of a dark arts in many ways of foreign exchange, where people are still being ripped off, and crypto, where still people are being ripped off. So we believe that the product will go down well. We've got users using it now. Users have been using it now for about 6 or so months or so. We've been really hardening it and making sure that not only our IT, but also our customer service and our treasury management works and is solid. And yeah, we're just a day away from launching now. So get ready to see that on App Store in a week or two's time. Well, I'm going to pause now. I've taken 40 minutes.
We've got loads of questions for you. The first one from David said, what it takes to get funding for a banking or payment platform or for a potential challenger bank during a crisis. In your case, it just means turning up to a crypto curry, but I'm sure there's slightly more to it than that.
Yeah, well, actually, so it's a really good question because it's been bloody hard recently. So it depends where you're at. If you're in seed land, it's really hard. Back end of last year was hard. Q4 was really tough because we were going through who's going to be in government, which was an important decision for people to make. For some people, it didn't really know which way it landed. For others, it did. A Labour government would have risked EIS, I think. And I think entrepreneurs were worried about that. And you'll find that many seed investors are high net worth individuals and entrepreneurs in their own right. Therefore, EIS relief is really important. And a Labour government might well have taken it away. They're certainly threatened to. And so that put people off investing in Q4 last year. And obviously Brexit did as well. People didn't know which way it was going to land. And they just wanted that certainty. And I think the closure of that in early December meant that come back in January, and I've never known a more positive few weeks in terms of investment activity. But now, crikey, it's even worse than Q4 last year. So it's a really tough environment for seed at the moment. Series A a little bit better, Series B a little bit better still. But when you're reliant upon high net worths in this stage of investment, and they've seen their portfolios go down 25, 30+% or more, you're doing well if you can close your round in these circumstances. So it's just cut your costs, see yourself through as best you can, come out the other side, and I believe there will be renewed faith.
Next question from Anna. Whether, I guess Anna's relating to Ziglu, if it requires a lot of starting capital.
Yeah, well, we've raised, I don't know if I can say how much money we've raised, but we raised more money than we thought we would. I better not say, just in case I'm not allowed to. I'm not sure what I am and I'm not allowed to say, actually. So we raised more than we thought we would, which is great. We've raised at a good valuation. It depends on what your tactic is. If your tactic is to build your own bank from scratch, which means more risk and more cost up front, but it then allows you to know your cost base is really low going forward and you're in charge of your own destiny. And that's a decision we took. So we built a whole banking platform and our app and everything that effectively we're going live with tomorrow for around about 1.7, 1.8 million, which is pretty cheap, I'm told, compared to anyone else out there. Now, I've done it a couple of times before. The team around me have done it before as well. So we know what we need to do. We're not making as many mistakes as perhaps we could have done or would have done. But if you can get a team that can work for free or work from the market value, you can motivate them with equity and or options, and those are real equity and real options. You can show that they're going to be worth something by demonstrating good behaviours in terms of allowing people to be able to sell a portion of their options or shares at certain events. That's a good way of showing they're real. And not having stupid clauses in terms of people leaving, a good leaver and bad leaver. Respecting your employees and showing them that you're going to look after them and giving a damn about them and trying to, people will work hard if they know that you're doing everything you can as a employer to make sure that they're happy, they're enjoying their job and they're respected and rewarded. So there's a whole raft of different things that are available to you as a founder, a CEO of a business, to make sure that you reward your people and make sure that they're there with you as part of the team. It's not all about money, but it's about getting that structure right up front to make sure that you're doing things in the right way.
During the FCA and PRA application, did you have to compromise on your original strategy or products?
The biggest thing we had to compromise on is cutting our customer numbers in half, as I mentioned. We didn't have to compromise on anything else really. We fought a hard battle to say we're going to make a current account bank and it will make money, because the banks would say, the incumbents would say, well, current account banking doesn't make money. Now, it doesn't make money because they've got massive cost bases. They've got, as I said, branches and cash and loads of staff running COBOL systems 100 years ago, and therefore their cost base is really high. Therefore, when you put that cost base across your customer base, it looks like you're not making money. But if you start and build your bank for £3 million, which is effectively what we did at Starling for the first build of it, and layer it across and layer your cost base, which is in the cloud, across your million or so customers, then it doesn't look anything like as bad. And so we didn't really need to change our model. And the model was very straightforward. Current account banking, we'll lend some money, we'll get some interchange rebate, and that model is not just it's the same. There's nothing unusual about that. All the sort of current account banks work that way. But yeah, interchange rebate from using the card and using it UK and abroad, they are different rates you get there. And also importantly, lending money was a key part of the proposition. So no, we didn't need to change that, no.
Cool, thank you. Is there £1,000 per customer valuation based on a traditional view of customer lifetime value in retail banking, or does it incorporate a significant element of platform or marketplace cross-sell?
Yes, it does. So a typical customer to a retail bank's worth about £140 per customer. per year is what 140, 160 is typically what we budgeted for and what most banks budget for. That's why when people are trying to buy customers, they buy them at around about 100 to 140 pound per customer, depending on which bank's losing more customers at that point in time. So typically they're the numbers. So yeah, there's an expectation that these new fintechs, because of their low cost base, because of their ability to be able to use their data more effectively than the incumbents, can leverage that data to more effectively cross-sell in due course. And we've yet to see the effects and benefits of open banking more fully, but we're going to start to see that in 2020. As soon as we get out of this position we're in now, we'll start to see the benefits of that. And it is a benefit. It's one of the things we wanted to make clear to customers was, look, please share your data with us. Allow us to see what you're doing. Turn your GPS on, because that will help us give you a better you, not everybody else. You, we're not a Facebook. It will give us the ability to be able to provide you with the right sort of information to make your life better. We can give you deals based upon the fact that we know this is the way you walk to work, or this is where you go to the gym, and whatever it is, or we can help you if you allow us to be able to do that. And that we haven't yet seen the power of that fully yet, but we will do in the course of 2020 and 2021. We'll start to see more leveraging of that. But yeah, that's what evaluations are slightly higher than we expected.
Cool. How the COVID economic shock is going to impact valuations, that given that Revolut does FX, which is now finished for 2020, and the US and UK are likely to hit 25%-ish unemployment, and given that bank stocks like Goldman Sachs and Barclays are down rather large amounts. So
yeah, well, I'm not any more informed than anyone else on this, am I really? I mean, I guess we've seen the challenges furlough staff because they needed to, because the main impact at the moment on banking is the use of the cards down around about 52%. Therefore, people aren't using the card. Therefore, people aren't losing their card. Therefore, transactions aren't going missing. Therefore, people aren't phoning up the call centres as much. So Monzo's closed down that Las Vegas call centre. Starling's not opening its Wales call centre. Monzo's losing 295 members of staff, furloughing them. 175 of those are in their call centre because of the fact that people aren't using their card as much. So will it materially affect the banks? Well, they're all well capitalised. They've got loads of investor money behind them. But it will affect them, of course, because interchange rebate the money people get when they use the money the banks get when you use your card will go down. But also there'll be more bad debts, and there'll be a general malaise, and people won't be spending as much. So all that will affect the world, and therefore it'll affect banking. I don't know how much, any more than you guys do, but it's going to have an effect. And you if you look at some of the stuff that I'm sure we've all looked at that's coming out of Europe and governments and the stats bureaus, anything from it'll be okay in a year's time, or it's not going to be okay in a generation, and you got to pick where you think it's going to be. I don't think there'll be the spike up that everyone's forecasting, because I think people will be far more judicious about spending money. They don't know if there'll be a second wave. So if you look at some of the numbers coming out, obviously we're in a low dip at the moment in terms of the impact on the economy. It's not going to spike as much as I think some forecasters believe. But we know the government will throw more money on things the moment we come out the other side. They're going to spend loads of money on infrastructure. They're going to lower taxes, I expect, before they raise taxes, just to get us through this year. So, we've seen the UK government, whilst they may not be very good at dealing with PPE, they've been very good in terms of ensuring that they responded very positively to trying to, as best they can, to support people's livelihoods and stuff. It's in many ways the civil service is slowing things down, or the bureaucracy slowing things down, getting money to people. But I think no one can argue that they responded very positively in a very ambitious way to the situation, and they will do that again, I'm sure, when the lockdown ends and people are back at work by doing those two things I talked about. But yeah, it's going to have a long-term effect across everything, of course.
RBS launched a new bank called Bow, which seems to have disappeared. Are other mainstream banks doing this? Are you launching new mini challenger banks of their own, and with what level of success?
Well, our CPO is on this call. Nick was the CPO of Metal, and Metal was the other challenger brand coming out from RBS. We managed to secure Nick's services in the last sort of 3 months or so, I'm pleased to say. But yeah, Bow was a retail one, and Metal was the business one. The incumbent banks have got two strategies to deal with challenger banks. They've ignored, and now they realise, oh my God, it's bad. They're taking customers. So the two strategies are launch challenger brands and try and respond in kind, but spending so much more money on doing it than you can believe, because they still have the infrastructure around them of a big bank. They think like a big bank. Therefore, they'll never be as efficient or compelling a proposition to the demographic they're aiming for as a proper challenger brand. Or they do what Barclays has done, which is layer on very effectively in many ways, lots of capability that gives you the impression that they're providing notifications and timely information, but it all ultimately goes through a batch-based system in the back end, and they've layered on another layer of cost to achieve that. So ultimately, their cost-income ratio is going up. The RBS brand's cost-income ratio is going up because they're doing challenger brands just to compete with the new modern challenger brands that are out there that are taking customers away. So, did I answer the question? I think it did.
If that answered. Sean's asked, will you be looking to offer savings accounts where you can earn interest on your crypto being held, similar to what Celsius Network offer?
We will, but not from day one. We've got a, as I mentioned earlier, backlog of functions and features. It is on there, but it's not going to be developed before June, but we will be doing that later on this year, yeah.
How has your strategy for Ziglu changed due to coronavirus? Is there concern from your investors?
How you doing? So, yeah, it's a good question, because it has changed, because we have had to respond to the fact that cards and FX isn't as important as it perhaps was in January or February. So we're putting far more focus into the actual features and functionality of the crypto elements of the proposition, so that rather than doing cards and FX and some of those features that enables people to travel and spend money abroad, we're saying actually we don't need to do that for another maybe 3 months or so. So why don't we do more features and functions on crypto? So yeah, that we have adapted as a consequence of that, but we can, because like our dev team is on a call like this every day at 9 o'clock in the morning, go through the backlog, and we can hone and focus and prioritize it accordingly. So that works well for us. So the second part of the question was that about investors? I missed that, sorry.
Yeah, and if there is concern from your investors, you can answer that.
Well, I don't think so. I mean, we got a great group of investors. Lots of high net worth investors have put money in, and I think if we were a challenger bank, a traditional challenger bank, they might be more worried. But I think that they know ostensibly our model is quite profitable. It's a good business model in its own right. It is not going to affect our launch. If anything, if you see some of the transaction volumes for crypto that are going through Coinbase and WireX and Revolut in crypto, they're going through the roof. So we are, if anything, relatively positive, and so are our investors.
What would you say is a tech stack of choice and of the future used by challenger banks? We're working hard here, Mark.
So, all right, I love tech. So we have pushed the envelope a little bit, more so than I might be comfortable doing. But when we were at Starling, we were all obviously we were cloud, Postgres, AWS, but very much focused on the AWS stack, but all open source, of course. What we've done with Ziglu is we've designed and built it on GCP, so Google, using Kubernetes and Istio. So that's enabled us to provide a degree of portability across different cloud vendors. Not that it's a requirement from the FCA. We're only an e-money company at the end of the day. If we were a bank, they have a sort of higher expectation in terms of what's called CISC 8.1, which is sort of material outsourcing and sort of concentration risk on certain vendors. They're not quite so bothered with e-money companies, but we've built that anyway. So we can run up an instance if we needed to very quickly within just a few hours at a totally different vendor, i.e. Azure or AWS, and run it off that if we needed to. But there's always this constant, and it needs to be a constant challenge between the IT guys that love to do IT, and I like to consider myself a bit of an IT guy, and then the business side of the business that wants delivery in terms of function. And there's this constant, we need to avoid technical debt. We need to make sure that the technology can grow and scale. And so we've got auto scaling, auto healing, so that, at 9 o'clock in the morning, when people are, or 8:30 in the morning, when people are on the platform, they're on the app, they're doing stuff, servers come up automatically, and then at 9:30, and everyone's sitting down at a desk, or 10 o'clock in my building, the servers go down, and there's less activity, but that's all done automatically. Now, that enables you to save money because you build that in from the start. You've got all the cool features and functions that enable you to only have, 1 or 2 SRE or DevOps people supporting your whole of your infrastructure for your bank. So that is so much different to anybody else out there in terms of the banking services companies, because they have thousands of people running literally thousands of people running their infrastructure and stuff, and we've got 2. It's not dissimilar to what the other banks do as well. So those having the right IT and investing a little bit in doing it right now does enable you to be able to provide cost-effective services.
If it isn't a secret, if you could please say what banks you use for safeguarding accounts, and to their experience, it isn't easy to open a safeguarding account for an EMI that deals with crypto. Was it an exception or a crypto-friendly bank?
I'll tell you one of my banks. I can't tell you. I won't tell you them all if you don't mind, because I don't want to. So the one bank we are connected to that I can tell you about is a bank called LHV, which is an Estonian bank that is friendly to crypto. But whilst they are friendly to crypto, and that we've got 2 others, another one in the UK and another one in the States, for different currencies. So it is, if you're doing something with crypto, you have to convince them that you take AML, compliance, risk, regulation seriously. There's a few people on our exec team and on our board who've done this before. We do take it seriously. We don't turn off our KYC and AML systems for months on end, and we will never do that, like some others have done. And we place a lot of reliance upon ensuring that we operate to the very highest level in terms of bank grade compliance and risk and regulation, and that's what we will do. Therefore, when you're articulating that and going through the application process with your banking partners, then and showing an appreciation of, we understand this, we get this as well, if not better than you. And sincerely, that sounds arrogant, but we really do. We know what we need to do, and we know what good looks like. And I think that that convincing is straightforward if you do know what you're talking about in this space, and I like to think we do.
If you've got any plans to go overseas in terms of customers?
We have, yes. So Q4 is Europe, and we're working out what language versions that we need there. I don't think the French are going to be downloading an English language version of Ziglu, so we may have to do a few versions. We're expecting up to 5, and then in late Q4, early Q1 21, we're looking at the States as well. So we've already started the process of engaging with lawyers to help us with that expansion over there and the licensing requirements. It's quite tough. Our e-money license enables us to move straight into Europe, but it doesn't enable us to move into the States, and it's quite hard over there to get card processing and licensing. So we're starting that process now, sort of a year ahead of the game.
In your opinion, what's the most creative alternative financial product that you've come across provided by challenger banks in the last 12 months?
So I like what Revolut do in terms of the functions that they provide. I think they're very innovative. If they can solve stuff with tech, they do. I think Monzo are good at solving stuff with tech. You start to see some of the stuff that I know that we will all try and do, but they're slightly ahead of the game in terms of using the data that you have from you to help you find a better partner to do certain things, whether it's a gym membership or it's gas or it's electricity. without having to go through the onerous process of application. So the whole idea that we've always had is that partners will sign up, and those partners will sign up to the terms and conditions that you have. So once you've signed up to Ziglu or Starling or Monzo or Revolut or whatever, as a partner, then you can take that customer, be through KYC, be through AML. You understand what their gas or electricity bills is. You understand what their gym membership is. You understand what they're paying for this insurance. You understand what road they're in. You understand, because of GPS, the route they take to work, whether they're passing Pret or Eat or whatever it is. And you can provide them with focused offers and deals that are relevant to them. And that is a very powerful thing, rather than people having to search through stuff and do this whole compare the markets type stuff. This is what it enables you to be able to do is this very bespoke. These are the right products for you, given your credit score, given your lifestyle, given your income. And we're starting to see that with some of the stuff that Monzo is doing, most notably, and Revolut as well. And Revolut starting to move into wealth, as we know, and kids products as well. So, you know, they're using that 500 million to try and like put their arms around the market. So they've got a slightly different, you know, obviously they're in the US as well. So depending on the strategy of the respective bank, they're all going after the world in a different way. But those two, I think, are the most innovative.
Can you go into any more detail regarding any pushback you've had from regulators, and what do you think they could do better?
Yeah, okay. So regulators in the UK are brilliant, first and foremost, and genuinely are. They push back, they challenge as they need to. You know, we don't want people running banks or money companies that don't take it seriously. So they give you a hard ride to convince them that your business model, your commercial model, your financial model, you've done all the thinking that you need to launch this entity. They push back on, they see everything, of course. So then when the biggest example I've got is when we went to them with our customer numbers, they said halve them, make it work with half those numbers. Tell me what's going to happen when there's a run on the bank, and give me all the different scenarios and stuff. So all that sort of stuff you get challenge on. With crypto businesses, that's a whole new raft of challenge you get there, because they're worried about AML, as you can imagine. They're worried about confusion risk, and confusion risk is the risk whereby customers may not be clear that when they're buying crypto is an unregulated activity, i.e. it's not governed by the FCA. So therefore, we have to be explicit in terms of our explanation of that and that activity. But yet, when they're spending money on their cards, or they're doing current account banking, or when they're borrowing foreign exchange, it is all covered. So they will challenge in the right areas, and they will make sure that you really understand your business. But we've had a great experience with regulators in the UK. They're very challenging, they're innovative, they're helpful, they're supportive. So yeah, it's been a great experience we've had.
What's the biggest change you would make for Ziglu based on your experience with Starling?
So what was that again? The biggest change?
The biggest change you would make for Ziglu based on your experience with Starling Bank?
Well, everything that I've learned at Starling and Centrip and arguably Barclays has gone into Ziglu. So I'd like to think it's the best of all of them. It's, you know, we built Ziglu for half the money it took to build Starling. We've shortcut many of the things. We've built it on later tech. We've got a focus on, you know, in 2020, you're not going to be launching a banking services or a current account product without having foreign exchange and crypto involved. Because, like, why would you do something that was you know, relevant 5 years ago? You've got to bring it up to date. So, you know, FX is a problem for people. Buying and selling crypto is a problem for people. So you'd build that into a modern banking services company. So that's what we've done. So, you know, I'd like to think that everything that we've done has been based upon lessons learned by not only myself, but also the management team in Ziglu. And we've got some great people. We've tried to bring, you know, best of breed people in from all over to make sure that we bring those lessons learned in. And, you know, if they can have learned lessons and made mistakes elsewhere and bring it all in here and not make mistakes, then fantastic.
If you've considered introducing and offering DeFi, so decentralized finance products at Ziglu, such as arbitrage trading, synthetics, or lending?
No. Yeah, it's on the, we might look at it in due course pile, but it's certainly not part of our roadmap at all at the moment.
How do you find the personal transition from corporate banking to startups?
So I thought it was, I love my career at Barclays. I learned a lot. I love their investment in people, which you can't get quite so much in startups because you haven't got so much money. So I started out a young banker, so to speak, and came out the other end of it, knowing about projects, knowing about IT, knowing how to deal with the bureaucracy and red tape of big companies, having a lot more patience than I thought I'd ever have, and learning what good was in many ways. And when I see some people come into my business now who haven't been through a big company background, sometimes you think, look, you don't know what good looks like in terms of the expectations of how to run a project and how to do certain things and how to be the best you can be at your role and your job. You know, when I was in Barclays, there was loads of people around me when I was going up the ranks who were competing with me, and I had to be as good as I could be. Unless you've had that competition, you know, you can be very laissez-faire and very relaxed in a fintech. But you know, that's good if you deserve that, if you've earned the stripes. So I'd like to think I earned the stripes. I worked hard for years, you know, silly hours, proving that I deserve that promotion. I deserve to get to where I got to. And then here now, it is totally different. It is a different, relaxed culture. And, you know, I love the relaxed culture that we have, but it's relaxed insofar as there's still expectations of you've got to work hard. You've got to be, you know, the best at what you are. So you can be relaxed when people get it and they're in that circle of, right, we get it. I don't stuff at people who just think they can come into a fintech and it's going to be all, you know, all sandals and t-shirts and I can piss around. That isn't what we do.
What's your marketing strategy to get the Ziglu brand out there during a crisis?
Our marketing or head of marketing on this call, and she'll probably answer that better than me, and she'll probably hate what I'm about to say as a consequence of being asked this question. But we are going with a soft launch, so we're not going to be doing a big announcement right from our launch when we do this, because we're adding in very quickly after launch a whole new raft of features and functions, and we need to broaden out that offering so that it's quite a compelling offering. And we're not doing that from launch yet. Our MVP is relatively straightforward. It allows you to be able to transfer money into your Ziglu account, buy, sell, hold Ziglu at the best price. Sorry, cryptocurrency at the best price, and hold it in your account instantly. It's there, and then transfer your money out. And then we're adding in payments and cards and foreign exchange in May and June. So we've got to work through, therefore, over the course of the next few days and weeks, how we evolve the message depending on what's going on in the marketplace. And I don't know the answer to that question yet, if I'm entirely honest, but all I know is we've got to be really careful how we do it, given what I said earlier about it's a shocking environment that we're all in, with people dying and people risking their lives for it, and people losing their jobs and being furloughed. So yeah, it's going to be a tough set of messages, but I think ostensibly the product's really good. I think people will genuinely like what we're doing. I hope it will help people's lives. That's why we're doing it. I genuinely think it will be a brilliant banking current account product that people will really love and enjoy. And I hope in a year or two's time we've got 1 million plus customers and people are talking about how great we are as well. But we've got to get our message right, and I appreciate that.
Maybe we should get Nicola on to host a separate webinar about how to market a bank during a crisis.
That would be an interesting one, yeah.
If you're up for it, Nicola. Somebody has asked, having worked at Starling Bank themselves previously, they're aware of the onboarding process. Will Ziglu be approaching a similar onboarding process to Starling, and what will be the requirements to hold a Ziglu account?
Yeah, so when we did Starling, there wasn't all the tech, would you believe, back then that there is now. So we have embraced technology a little bit more. It's less manual here. So at Starling Bank, I don't think it's changed since we first designed it. They do, it looks pretty good. You got a whole, process of photos or from video actually, and it's validated against a driving license stuff, but it's all manual. So you'll see there's far more customer support staff in Starling than per customer in another bank, because part of our ethos was getting to know a customer, and having more customer service staff per customer than the typical banks, and making sure that the customer experience was great. And we'll all know there's one or two challenger banks or EMIs out there, some of which I've noted already, who've got shocking customer service. So that onboarding journey doesn't use any major tech, if I'm honest with you, at Starling Bank. Ours does, so we use the same tech that both Revolut, if we turn ours on, and Monzo use as part of the onboarding journey, which means that we get a very high match rate. But in parallel with that, we also do a manual review of the whole lot as well. And so we're honing that so that we get sort of 85 up to around about 95% match rates, and we're comfortable with that. So we're embracing more tech than we did in Starling, but we hope the level of customer service will be equally as good as Starling.
I've got to say, Starling is by far the best bank I've ever dealt with. There are several challenger banks now. Will they all survive long term? And what will be the key success factors? Is it tech or good customer service? Is it the tech or is it good customer service that makes the difference?
Well, yeah. So sort of three questions there. But I think tech enables you to have a low cost income ratio, which I think is ultimately important. Good tech, that is. Customer service, personally, I think is really important, but it comes at a higher cost. So, you know, the typical ratios are one customer service staff to 10,000 or more in some EMI fintechs, about 5,000 or so in Starling, certainly in the early days. So that's a good ratio to have. But yeah, it's a combination of features and functions, and you know, do I think they'll all survive? I do actually, yeah, I do think they'll survive. There may be some consolidation, but you may or may not be aware RBS approached Monzo to buy them before they launched Bo, and then realised they couldn't afford them because, you know, it's expensive. You know, the value at some of these challenges is quite enormous. And if you're running a challenger bank, you don't want to be selling out to a big brand. So I genuinely see there's going to be a sort of a transition and switch point over the next 5 years where the incumbent banks cannot afford the challenger banks. The values are too much, and there will be a sort of a transition point in, if you think of the very high cost income ratios the banks have got, when their income starts to come down because SMEs and retail customers are flocking to the banks, their ability to spend money to respond to new features and functions will go down significantly. And you can see them sort of asset stripping, selling their branches, as you're going to have to do anyway, and materially shifting their business models is almost inevitable. And those customers will go to the challenger brands. But you can see in many ways some of the challenger brands becoming incumbents. Starling's the most obvious version of that in many ways. It's a little bit more, I use the expression advisedly, and it's probably a bit unfair, but a little bit more parochial than perhaps Monzo or Revolut or N26 in terms of its perspective on the UK. But that's not a bad thing. It's a very, very good, as Erica was saying, it's a brilliant bank and does a great job and is well run, and its IT, I think, is pretty good. So those things, you know, will count for it. And, you know, it hasn't expanded as much and taken as much investment in terms of external money. It managed to get 100 million, incredible sum of money from the RBS fund, of course, which allowed it to be able to, you know, do adverts of birds flying around the sky and stuff, which others have not been able to afford to do to the same extent. But it's, you know, I do genuinely think those challenges will be around, and it will be the incumbents that suffer.
If you plan to implement machine learning into your products or operations?
Yeah, well, yeah, of course. I mean, we've got to do that. You can't be doing what we're doing and not incorporating machine learning at some point. It's important. There's a question on tech earlier. It's important that you store your data in an effective way to enable machine learning to occur. It's easy enough to say, yeah, we'll do that, but you've got to have the right data structures in place to enable it to happen. And these types of things are really important to design up front. So one of the points that I was trying to mention earlier is that we've done a lot of thinking up front in terms of how our IT works, how our data structures work, to enable us to be able to know that in a year's time, when we're doing all smart notifications about stuff, that it's a personal-based smart notification, not just like you get from Revolut, crypto's gone up 4.1% today, and a broadcast is specific to you and your holding in your life. that's cool stuff you need to design in from the start. And it's not just about machine learning, it's about your database structures underpin all that. So yeah, we've done that thinking already, and we will be doing that. Yeah.
How to compete with already established challenger banks like Monzo, Revolut, if you are a startup who's trying to be innovative and original?
Yeah, it's a question I get asked all the time. It's a question I got asked when I was at Starling Bank. How are you going to compete with Barclays and Lloyds and Tandem and Atom? Yeah, we're going to be better. And it's as simple as that. And as you just said, Erica, Starling Bank's great and it is really good. It's the best one, but we're going to be better.
What changes will you make to customer acquisition and retention in order to compete with incumbent neobanks and reduce your CPAs and churn?
Yeah, well, actually, Nick and I, our CPO, was having this conversation a day or two ago when he was challenging me on making it easier. And I was listening to my security guy saying, you need to make it harder. So yeah, there's a balance between ensuring that through the customer journey that you get the right customers and you make it an easy journey and you make it a compelling, easy proposition for people to buy. You don't want to be putting barriers up to entry. You know, I remember when again at Starling, we said, look, you're in prep, you want to be able to, there's a poster on the wall that says, open a Starling account and here's £10 on us. And you want to be able to do that by the time you get to the front of the queue. And that simple, straightforward onboarding journey is at the very heart of what we're trying to do. So yeah, it's really important to make onboarding simple and straightforward. But at the same time, that's why you need the tech, because we can do it so much quicker than Starling because our tech is better. And that means that when you do get to the front of the queue, you have got an account, you have got the money to spend. And it's a really important point. And, if Nick was able to talk, he would say he's been challenging me on that and making it as easy as possible. But there's a number of risks as well. I don't want to go through risk and security now because it's like a big subject in its own right. But there's all sorts of stuff that people open multiple accounts and sell devices, and there's all sorts of stuff that we need to protect against as well.
Mark, thank you so much for your time and all your answers.